Welcome to the Melinda Eitzen Show. I'm Melinda. Today we're going to talk about real estate. And we have with us Adam Carricker and Joe Soto, and they are going to talk about real estate from different angles. Welcome.
Hello.
Melinda, thanks for having me. It's a pleasure to be here.
Adam, tell us what you do in the real estate world.
So I am a residential real estate broker. I work with the Fowler Real Estate Group, and I work with anybody looking to buy, sell, lease, invest in real estate. Pretty much the full gamut of real estate services is what I do.
Okay, Joe, tell us how you touch the real estate world.
So Joe Soto, I am a residential mortgage lender. So I'm at CrossCountry Mortgage, and you want to buy anything residential investment, come to me, you get funding, lending, all that kind of stuff. So.
And I happen to know by education, you're a lawyer.
Yes, that's true.
I like that. I mean, as a divorce lawyer, sometimes when we deal with lenders, which is common because the house is one of the big assets they're dealing with, they don't always get it, what I'm trying to talk about. And so I think that's unique to you, that you have some understanding of the legal side and the legal language that we're talking about.
Yeah, I mean, 100%. I think, I practiced, I did divorces, did family law for about 10 years. And then I switched over to do this, and it's helped me tremendously when it comes to your area, right? Divorces, people, separating properties, paying out spouses, refinancing. What's the language need to say? When can we begin? So it's been very good for both of us, for us and for divorce attorneys.
Yes. So we're in a challenging time, I would say. People are divorcing. That's always challenging for them. But the interest rates have been high a long time now. So the houses aren't selling as fast, and they don't know what to do if they had a low interest rate.
So I think the misconception is the high interest rate. And Joe can speak more to this than I can. But think about when your parents bought their first house. Ask them what their interest rates were, and they'll
12.
Yeah, they'll give you something that's double digits. And I think what really ruined the real estate market from an interest rate perspective was the 2020, 2021, 2022, where the interest rates, we saw 2s and 3s, which were, historically unheard of. And I apologize, Joe, for getting too much into the mortgage side of things. But right now, I think they're sitting somewhere around 6.5%, which is not bad. Now, everything that I've read and focused on says that the market is at balance when those interest rates are between 4 and 6. So we're not really far from where you want to be from a financial standpoint when it comes to your real estate investment. But like I said, don't want to get too deep into Joe's world.
We're going to come back to that with Joe. But Adam, people have to sell their houses often in a divorce. Not always, and we're going to talk with Joe about what could they do to buy the other one out. But if they did decide, hey, we just need to sell it, how long is it taking to sell them now? Is it gotten, I think it's good. It's not as crazy fast as it was, because that had its own problems.
Right. So right now, here in spring of 2025, definitely in a buyer's market. So if you're a buyer, you've got a lot more leverage in a situation. What I would recommend, and I've been on both sides of this, is if somebody is going through a divorce and they're considering selling the house, or they have it on the market, one thing that is almost like blood in the water to a buyer's rep is to walk into a property and know that something's wrong here, or that it's a forced sale situation where, let's say, there's only one set of clothes in the closet. I know immediately that it's probably a divorce, or there's one toothbrush on the in the bathroom. Those are signs that I say, oh wow, I can come in here. I know they need to sell this property. Buyer's market. I've got the leverage. I can offer them well below what they're asking for, and probably get it because there are not that many buyers right now, and they're subject to take what they can get. So if you've got a property and you're having to sell for divorce reasons, maybe don't get rid of all the spouse's clothes. Maybe
Don't make it obvious.
Yeah, don't make it obvious, because those are some things that jump out. Now, realtors notice that more than buyers do. So, I mean, I usually wait till we leave and say, hey, it looks like this might be a divorce, so let's get aggressive with our offer. So that's something to be mindful of. And then, right now in a buyer's market, the inventory is a little bit higher than we're used to seeing. Now, we're getting into the peak real estate buying season, which if you have a single family home and you're in an area where the schools are favorable, the buying season tends to go along with the scholastic calendar.
That makes sense.
You've got families with kids who they want to wait until late May to move. And they want to be somewhere new by early August if they're changing schools. So that we should see an upswing in the buying activity just based upon the time of year. Now, if it's not a single family home, it's a townhouse, a condo, those markets tend to be year round. Sometimes they'll take a break during the holiday winter seasons because that's just a tough market as it is. But generally speaking, we are entering into the busy season as far as real estate goes.
That's good. Okay, so Joe, let's say in my divorce situation for one of my clients that they don't really want to sell it. One of them wants to keep it, but they need to maybe get some money out of it. How do they go about that?
So yeah, I mean, when you get into that kind of situation, there are a couple different options, kind of depending on, as you know, kind of the temperature of the divorce, right? Are they kind of agreeable, not agreeable? So always, they can refinance the home, right? They can refinance the home. They can pull money out of the home. And where the importance on that, where that lies, is the language in the divorce decree, right? So we use something called an OWLTY lien, OWELTY.
And no one's ever heard of that except us.
Except us. We're in a specific club there that knows what an OWLTY lien is. So with the Texas real estate code and guidelines, they carve out a section for OWLTY liens to be able to be run as a rate and term refinance. Why is that important? When you're pulling money out of a house, you have a rate and term refinance and you have a cash out refinance. Okay. So with a rate and term refinance, you get a better rate, closing costs are less, and you can pull more money to give to the spouse above kind of an 80% threshold. When you have a cash out, you're stuck at the 80% threshold and you can't pull any more money out. You get a worse rate and it costs more with title and fees and all that kind of stuff. So that's option number one.
Yes. And let me just reiterate that for a second. I have experienced that not even all family lawyers know what an OWLTY lien is. And it's really important for, if the client is watching this, to make sure that you're asking that question. I want an OWLTY lien because I want the better rate and the better conditions. And they could talk to somebody while they're still going through the divorce about this. They don't have to wait till the divorce is over. It might have to close after the divorce is over, but they could start doing the work with you or someone like you, right, Joe?
Correct. And what I love to do is when the client reaches out to me, if an attorney refers them to talk to me or they find me during their divorce, I reach out to the attorneys and I tell them, hey, we have to have this in. If you want, send me the divorce decree. When you're drafting it up and when you're doing initial revisions, send it to me and I'll give you a thumbs up or I'll tell you to add stuff or take stuff away just because of my history. So I know how to read them. I know what it needs to say so that the client gets the best opportunity to be able to keep the home, pay off the spouse, pay any money owed, and be able to move on in the best situation that they can be in.
Let me change the circumstance a little bit.
Give it to me.
Let's say that they don't need to pull money out of it. They have other assets to offset the value of the home, but they do want to get somebody off the debt. So in our example, let's say husband's going to keep the house. He's giving wife monies from some other account, but wife is also on that debt. Is there ever a way to just have him assume the loan without refinancing?
Sure. Yeah. So this has become quite popular here recently because, a lot of people bought or refinanced in the 2 and 3% interest realm. And the assumptions are occurring more and more. Now, There are certain loans that will allow for it. Government loans, kind of FHA, VA loans. If the loan was an adjustable rate mortgage as well. I have been seeing some servicers and some portfolio loans that were done, even though they are just a normal conventional loan, being assumed. So it's definitely something to check with your servicer if it's something that you can do on that particular loan or mortgage, and just let them give you the final answer on it to do it. So that way you can take that person off, keep the same rate, keep the same payment, keep everything the same, and you can get divorced and do what you need to do.
Okay, let's say it's not assumable. Now, can they refi just for the purpose of removing the other person?
Yes. So a refinance just for the purpose of removing them can happen. You can even add people on to help with the refinance. Sometimes, parents have to get involved, or sometimes
For qualifying reasons.
purposes. And then you refinance to a current rate. Kind of as Adam said, 6.5 to about 6.9 is where we are. So whatever the current rate is at that time, then we refinance it to that piece, to that range of rate, and then they're off, and we just move forward.
Okay, Adam, question for you. The rates are higher, obviously, than they were 2 or 3%, but does that mean the prices came down?
Yes. So there is a direct correlation between interest rates and pricing. When the rates are high and there's few buyers out there, obviously the prices are going to soften a little bit. You're not going to have as much competition for a single property unless it's in a very desirable neighborhood or it's a fabulous house. I mean, there's certainly circumstances right now where we're seeing multiple offers on properties, but generally speaking, when the rates are high, the prices do come down, which that makes a great time to buy. One of the things that I like to say, Joe probably uses this, is you marry the house and you date the rate. So rates go up and down all the time. You keep your eye on those. When you find one that's lower than what you've got, then go see someone like Joe about doing a refinance. And then inversely, when you have low rates, the prices are going to go up because there's a lot of competition for those houses. You're in multiple offer situations, and more often than not, you're going to be required to pay above listing price for those houses. So right now is a great time to buy. Take advantage of the high rates, as I say, refinance them when they come down and get a better purchase price for the house.
Do you think when the rates are higher, there's less investors? Rather, it's regular people buying houses mainly and less people investing, or are the investors out there no matter what?
So a savvy investor, they don't have a perfect time. They're looking for the right deal. Obviously, they prefer the lower rate, but they know that there's other investors out there who maybe didn't make a good decision when it came to an investment, and they're going to default on their loan.
Opportunity.
And that creates opportunity for anybody to pick up. So, like I said, there is the best time to buy and invest in real estate is today. The way that these properties appreciate in value, that's only going up. So.
Oh yes. So I bought a property in 2019. I bought my house, and at the time I had to pay a little bit more than list, and that it appraised for, because this woman was just insistent that her house was worth so much more. And then you saw what happened right after that. She was right. It was worth way more than she even had me pay for it. So that was a good decision. And I have a great interest rate, so
Yes.
I can never move. I will be there forever.
No, and I've seen the balance sheet for your houses, Melinda, because I've helped you with some tax information, and yeah, you're never selling any of those properties that you bought in 2019. They're going to be with you forever. So
I love real
you like
estate.
them. Yes.
I mean, with the market, it's crazy time with the tariffs and threats of tariffs and all of that. And I've been like, I have real estate. I love real estate. I think there's something tangible about owning land
Correct.
that is attractive to me. And if you own the land, you can control housing price for yourself and for other people. Like I own my son's house, so
That's right. Control it.
yes, I think it's really nice. Okay, so Joe, back to you. I have realized just by buying property myself and in all my cases that there's all different types of lenders. And when people are looking for someone, sometimes somebody is a broker. They're not really working for a lender. They're helping people find a lender. And then sometimes it's actually the person you're dealing with works for a lender. They work for the bank or whatever. What's your situation?
So we're a direct lender. So we are at CrossCountry. We lend directly to Fannie Mae, Freddie Mac, which are conventional loans, straight to Ginnie Mae, which is your government FHA and VA loans. The difference between a lender like me and a broker is I know what my underwriting pod, right? I have about 5 to 8 underwriters that underwrite for conventional loans, government loans, and if we go to let's say you want to have a jumbo loan, you want to go to Bank of America or Chase or Truist, right? They'll underwrite to all those people. A broker is a shop with probably 2 or 3 people, and they have to get documents from the client, package them, and then check the underwriters physically at Bank of America, at Chase, at Huntington, at Truist. So they don't do everything in house. They package it in house and they send it off. Then 72 hours later or whatever, 4 days later, 5 days later, then they'll get something back and say, hey, we need XYZ from the client. So then they go back to the client. So it's having kind of like an independent circle with access to all these different people. Now their rates are sometimes better, or they're actually a lot better, because there's no overhead with them, right? They're just farming it out to all the different banks in general versus working directly in and having a pot of underwriters, an appraisal panel, having your people in-house.
So it sounds like you would have a little bit more knowledge of what's possible.
Correct.
And be able to move a bit faster.
100%. When things get crazy, like for example in 20 and 21 and 22, when you had to move fast, you had people putting in offers and having 8-day closes, 10-day closes. Hey, we have a problem on a file. We need to really flip it around and get it right. We move very quick because we had direct access to everybody.
Oh, that's nice.
While a broker, even though their rates were really good, they
couldn't get it done fast enough.
So then you can't have a 10-day close when it comes to that, because it's 5 days of it's just getting the docs over there and underwriting and coming back. So that's just a little bit of a difference. So it's whatever you want to do. And just like your business, my business, you can look online and find Adam's business. You can find 100 different people online, right? If your ankle hurts, you can Google it and you can find an answer to it probably. But going and talking to a lender, talking to a broker, in seeing their face, local, it's so important. Because again, it's the same trade-off in everyone's business.
Adam, is it helpful for a client to get a letter from Joe or someone about their qualification?
Yeah, absolutely. In fact,
in advance.
Oftentimes, I see somebody before they've even begun the buying process or the real estate investing process. And a lot of times they want to know if I have a recommendation on a good lender. And I would say having a good lender is one of the most important parts of the transaction, because that's where the money is coming from. And the ability for the lender to close the transaction, given the timing in some of these deals, is very important. So the last thing you want to do is get a call a day or two before closing, say, oh, hey, we need another week to finalize
or the
this
day
loan.
of closing.
I've gotten that too. I've been walking into the title company, get a call from the lender, said, we're going to have to push this for a couple of days. Nothing complicates a deal more than a delay in the process. So having the right team, lender, real estate agent is very important to anybody, going through real estate investing or buying or selling any of those.
And I think if you're somebody that you're trying to get to sell the property to you, it's helpful to have a qualifying letter in advance.
And I'm sorry, I missed your question about the qualifying letter. But yeah, that is almost a requirement when submitting an offer to buy. The listing agent's going to want to know, I've got an offer here. Is it backed up by financing that can justify the purchase of the house? So are we just submitting an offer for fun, or do these people have the money to do it? So having a pre-approval letter or pre-qualifying letter, it's going to be required. In fact, you get one of those before we even go start looking at houses. That way we're ready if we find the right one to submit an offer. And oh, by the way, here's our proof of financing.
Yeah, that's great. Well, because maybe you think you would qualify and you're wrong. You
Yeah,
know?
like I said, a lot of people getting into the process, they don't even know, how it works. And so before we even start looking at properties, hey, let's go talk to Joe. Let's let him fill out his application. Let's see where you are financially to tell us what your budget is, where you need to be looking. And for some people, they have a good idea. Some people have no idea, and they thought that they were able to afford a lot more house than that Joe tells them.
Yeah.
So that really helps set the stage for the transaction. Some people are surprised, like, oh, I didn't know I could afford a $750,000 house. We were looking at, properties half that much. So
yes.
Getting with a lender who can help you and put you on the path for success is definitely getting started in the right way in a transaction.
Joe, on the qualifying front, sometimes we have clients, they're getting divorced and they have a lot of money, but maybe one person doesn't work. They don't make any money. They just have a lot. And is that a problem? Like if they don't have provable income, they just have a bunch of money in the bank, will they still qualify?
So it depends on how much money they have in the bank, but you can do asset qualifiers, you can do bank statement loans, but kind of to touch back what I said earlier is we have people hopping on the loan sometimes for spouses that are getting divorced.
A parent.
Like a parent or a sister or a brother or a friend. To hop on and
the paramour.
Yes, of course. It's just a friend. So, but we have people like that sometimes hop on for that reason, right? We've had someone that didn't work or someone that's been out of work for a while, or they just got a new job and it's not what it used to be. And so, all of that gets mixed into it to be able to qualify them.
And they're just acting kind of like a guarantor. Like the idea is they're not going to pay it. The person who's really going to live in the house is going to pay it. That's their deal between themselves,
correct.
Right?
Yeah, it can be whatever. I mean, but just know that if push comes to shove, can they make their monthly payment? I mean, that's the whole point behind it. And if that person's signing on to it, then they're more obligated to help make that payment every month and make sure it comes through.
It seems like there's been times in my life, there's been trends where the banks won't give you any money. The banks give you way too much money. Now the banks aren't giving money again. You don't have to give them anything. You have to give them everything. Where are we in that cycle?
So, I mean, going back to kind of the pre-approval letter that we were talking about before, right? Some banks, big banks, I'm not going to say any names, but, big banks, if a realtor gets a pre-approval letter or a pre-qualification letter from those big institutions, they kind of question it. They look at it like, hey, is this something that you just kind of told them what you make or what you think and they've given it to you based on what you've told them? Or have they really put eyes on what your income is? How much do you have in the bank? All that kind of stuff. So it's definitely tightened down, after 2018 and after the different incidents that have occurred in the past. Guidelines and underwriting has really tightened down and buckled down to where we're making sure people are qualified, really, really qualified, and not giving fake documents with technology and everything these days. So it's a lot more stringent.
Oh my gosh!
What we're getting into.
Everything can be deep faked now. That's really scary, right? I don't even know how you really prove anything anymore.
Yeah, you deal with it, right? With your cases and the deep fake. And I didn't send that message. They used some app, and it's crazy.
Which could be true. I mean, in most cases, I will say, most people tell the truth in court that was their text message. I would say 90% of people will admit when given the text, yes, that was my text message. But the 10% that will lie about whatever, it's very hard to prove that it's real if they're willing to say that's totally made up. And that kind of liar, they lie about, you say the sky's blue and they say, no, clearly it's vanilla today.
It's vanilla.
Yeah, I mean, they're going to lie about anything, not even important things, you know.
Sure.
So that's very hard. But we're certainly talking in the legal community about how do you prove anything anymore with AI.
That's right.
My clients are using AI to tell me the answer to the question they have before they ask me the question.
Well, I've got a good story about that, Melinda.
Okay.
So one of the most awkward situations that I ever was in at a title company during a closing. Newly married couple. Neither one of it was their first marriage. He was a little bit older than her. And it got to the point in the title documents where you verify all the previous names that you've gone by. So you're looking at that. You've got your information, also has your spouse's information, and you just initial and sign right under like you've gone by these names in the past. Well, she had a few names on there that he didn't know about, which coincided with some marriages that he didn't know about.
Oh my gosh.
I picked up on it a little late, but the title guy, he knew it happened instantly, and it was the most awkward silence, and then followed by discourse between the couple. Ended with her storming out of the room, out of the title company, getting her car, and sped away. And then he sat there and looked at both of us and said, well, can we still close this deal? Actually, no, we need her to come back because she has to sign this along. Anyway, they worked it out. We ended up coming back, the next day to close. Everybody was fine. But for anybody who doesn't think that that's going to happen, it will if you're buying a house. So, like I said, honesty is always a good policy when it comes to that. So
that's a good way to find out if somebody was married before. I just mediated a case, and the whole tenet of the case was that it turns out their marriage was void because you cannot marry someone when you're still married to someone else. And
except in Utah.
Not even in Utah anymore. And the problem was in this situation, the wife did not know he had not been divorced. He had represented and showed her fake divorce papers with a cause number that did not exist.
Wow.
Like that fake. Mm-hmm. And she believed that he was divorced and married him. And now years and years and years later, guess what? You're not really married. So it's a big fat mess because the law does protect the innocent person in that, but you have to be innocent. So then the question is, did they know or did they not know? And oh my gosh. So it's kind of like the catch me if you can. Like, were they really having two lives and two families, or were they just, it was administrative, or I meant to get divorced, or we thought the judge signed it and the judge didn't sign it. But a real estate search would be one way. A name search would be another way. Like, don't just blindly go marry people. Find some stuff out.
Yes, second date type of conversation.
Hire a PI. It's not that expensive. Just do a little background. Everything's online now, right? I mean,
it's true.
There's got to be title history. That's the whole point of the title insurance, right? We need to know the history. Okay, to that point, do you all think who you use for title work is important? Are there good and bad, or they're all fine?
So I've never had a deal that didn't close because the title company didn't do their work. In most instances, it's a title company who you've either at least heard of, maybe even done some work with. I've got a really good title company that I've closed a lot of deals with, never had any issue. But as far as the title goes, I haven't. One is just as good as the next. I mean, do they make their mistakes? Yes, but are you also getting a title insurance policy if they do mess up where you're covered, and that's the case in all transactions. So
gotcha.
From real estate from a real estate agent standpoint, there are title companies I like better just because I have a relationship with the escrow agent, and we can predict each other's movements, and it's
going to be more streamlined.
Yes, exactly.
Work with Joe, it's streamlined. Work with good title, streamlined. So I've always noticed that my realtors do have an opinion. They're like, no, I want to use this title company. But
It
I
may be
could.
because that title company's taking them to lunch a little bit.
Right.
exactly what it is.
I could say,
Rangers
no, I
games.
want to use this title company, right? I could, as the client, insist upon my own title company.
I have one that they do all of my OLT liens. So I send all my OLT refi. There's no questions. We know the drill.
Yes.
They help draft.
Streamline,
They
same
help
page.
draft all the warranty deeds, OLT liens, everything on the back end, which is always a blessing for attorneys.
Yes.
But they draft all the documents, they record it all done, all right, correct order, release of lien, get everything done and good. So title's all lined up.
And you trust them.
Yeah, 100%.
That makes a big difference. Well, we're going to put your contact information on the screen. So, Adam, what areas of Dallas-Fort Worth do you help with?
So my office is located just west of downtown Dallas. I tend to, cast a 3 to 5 mile radius of our office, but I have done deals as far west as Weatherford, as far east as Tyler. North, I've gone to Sherman, Denison area, and I've gone as far south as Waco. So, but my comfort area is Dallas proper. But happy to consult on deals anywhere in DFW.
Joe, how about you? What area do you cover?
So I'm licensed in Texas and in Florida. Our branch is licensed in all 50 states. So we do everywhere, all over the country. But with all my attorneys and those kinds of things, it's majority Texas, and I do Florida as well.
Thank you both so much for being on
Thanks,
the
Melinda.
show.
Thank you, Melinda.
We're going to go buy some more land.
That's right. Let's get some land.
Thank you so much for listening. I know that real estate is important to all of us, and the house is often the big asset in a divorce case. So hopefully you learned a little bit more about how to make the best decisions for your case. Thanks for listening, and tune in next time.